Hello, I'm Nari McDiarmid for Mining Journal, and I'd like to welcome back Mark Bojanjac, Executive Chairman of PolarX, which has just released an updated scoping study for the Alaska Range project in the US. Now, Mark, the metrics are quite different to the recent study last year. What for you are the standouts?
I think, well, let's face it, it hasn't been the copper price. That's actually come off in the last 9 months since we did this last. But it has been more than doubling the total copper and silver in this deposit through a reinterpretation and through bringing in all of the extra work we did on Caribou Dome over the last couple of years into a 2.6 times bigger resource. So that pretty much has really added the spice to this at the moment. You know, it's effectively right now a bigger project, and it's got most of its calculated metal in measured and indicated category, so high degree of confidence. So that's been the biggest change. And that, of course, has flowed into an updated scoping study where we turn pictures of holes in ground into something that's, very broadly quite real and economic. So the standouts really are, we've got 3 times the NPV in both US and Australian dollar terms we had 9 months ago. So right now the NPV at 7% is just over 300 million Aussie. And bear in mind, this is not a company capitalised at less than $15 million today, with Northern Star as a second largest shareholder. So there's a big disparity between project level value and market capitalisation at this point, which let's hope the market will fill. Due to the fact that the resource is so much bigger, it's much more copper weighted than gold this time, because Caribou Dome is all copper with some silver credits. So that's made a big difference. But, we're looking at something today that's just under 40% internal rate of return, with, a very achievable and credible CapEx outlay of 220 million Aussie, or 145 US. So it's something within realm of reach in the fairly near term. That said, the reason we do these scoping studies internally, and most people probably would just do them internally, right, back of the envelope with the team around the table. We don't do that. We actually engage independent consultants. So with all the rigour of a proper feasibility study, we don't even calculate the numbers, right? They do that. But it gives us a truthing, is probably the best phrase to use. And it tells us exactly what we need to do to make it better. And hey, it did that 9 months ago. If you went back and listened to that chat we had then, I said bigger is better. Well, it's 2.6 times bigger today, and it's 3 times the bottom line economics projected. So quite right. The message this time is a little different, and we'll come to that in a little while.
Well, Mark, in terms of the metrics that you've put out with this study, I understand they're quite sensitive to changes in the copper price. Can you elaborate on that?
I can, and then hopefully we've got in front of us now the charts over the last 3 years. But copper's been well over $10,000 a tonne for a good chunk of that time. Right now it's bobbing around 8,500, which is the number we've chosen. Last time we used 9,000, which is a line of best fit. So we've reduced that by $500 at a number this time. And that in itself, that took the best part of 100 million Australian dollars straight off bottom line, just due to the copper price. But it tells us really, when you go to production with an asset like this, you've really got to hedge some of the metals price. Now, at the moment, as I said, it's more copper weighted than gold weighted. Gold seems pretty firm at $1,900, so that's the number we've used this time. But right now, to be honest with you, it's all about copper. And if you believe the forward prognoses, we're both looking at increased demand. If you set that aside, it's undeniable we're heading into a point of constriction of supply into the future. And, there's nothing more certain than that. We could be with one of the highest grade copper projects in the world, producing the biggest margins into the biggest uplift in copper for many, many years. So, that's our program at the moment.
Now, Mark, in terms of one of the things that's changed since your previous study, obviously the size of the Caribou Dome deposit has increased, as you've mentioned. And so now you're looking at starting mining there as an open pit rather than an underground, and then moving to the nearby Zackley deposit as an underground mine. But given that underground was originally in the equation at Caribou Dome, where do you see the further potential at the Alaska Range project?
It's still underground on both projects. The reason we flipped to open cut this time is the resource is so robust at Caribou now that, and such high grade, that you can't actually take it all with open cut without leaving too much behind. It still continues underground. And I should put that in context. At the moment, Caribou Dome's resource modelled down to 300 metres from surface. Both our deposits start from surface. So, you're in pay dirt day one. We know at Caribou it actually continues for at least another 150 metres below that. And, that's a 50% extension down dip. It's a lot. And we know that because there are already 2 holes into it that have intersected the same geology. Now, that needs to be infill drilled to add more, but it's pretty clear to us that Caribou will extend with a higher degree of confidence than you would normally see. Similarly, exactly, wide open everywhere. We can talk about that a bit later.
All right. Well, in terms of the outcomes of the study, it identified some high priorities. What's next for Alaska Range?
Well, I'll probably take you now to the boring charts within our scoping study. The bit most people flip over. And the reason I'm doing that is that that's actually where the magic is. Now, what we've done, excuse me, is literally taken baseline on all of our metallurgical work. So we've done it in the simplest possible manner. So just crush it, grind it, float it, and measure what the concentrate grade would be. And the numbers are okay. They're well in the realm of commerciality, but they're certainly not optimised. In fact, even our test work hasn't been optimised. For copper at Caribou, we're modelling this on 78% recovery. We would hope to have well into the 80s in practice. And we're aware of other processes and even flotation reagents, which will deliver us higher outcomes than that. But what those charts are showing is that with a higher concentrate grade and a better metal recovery than 87% of the copper we mine, you can double this thing quite quickly. Just moving the dial from 78% to 85% recovery and shipping out the door a 20% concentrate almost doubles the NPV on this project. And so bang for buck, that lab test work from here in adds by far the most money. The graph just at the bottom there shows you the sensitivity and of the various outputs of this project. And the overriding one that's most sensitive is actually your payability costs on the concentrate you ship out the door. And shipping anything less than 20% gets a discount at the refinery, and anything at 20% or greater gets treated far more better and lowers your freight cost. And freight, since COVID, matters. It really does. It's actually one of our biggest operating costs. So the more we can reduce that, the better. And as I said earlier, we are aware of processes that will deliver better recoveries and better concentrate grades than we're showing here. And moving the dial only a little bit can double it quite quickly. So that's where the energy is going for the next few months. And I would hope to be sitting in front of you in another 6 to 9 months saying, look at this, we've fixed it.
So, Mark, in a nutshell, what's the key message you'd like to leave people with now that this study's out?
I think realistically, these deposits are wide open at depth. They start at surface. Caribou in particular is one of the highest grade copper deposits you're going to find anywhere. And it's copper. It's not copper equivalents. We're not playing with metals and other dubious integrity and marketabilities. It's copper. And, it's all about copper. We know we've got the fist of a very robust project here with a strong shareholder base, including Northern Star. And if our biggest discount at the moment is actually cracking the metallurgy and delivering something even better than it is, we think we've got a good shot at that into the future. So with a little bit more test work, we could be sitting here with numbers that are even better than this.
Well, I look forward to the next update. Mark, thank you for taking the time today.
Thank you, Nori. Always a pleasure.